The U.S. Federal Reserve announced Wednesday it would raise its target for interest rates, noting the country's economic activity had been picking up and its labor market strengthening. The University of Nebraska-Lincoln's Bureau of Business Research said last week it believes economic growth across the U.S. will be moderate, while in Nebraska, a weaker farm economy will limit the state's economic growth. As Eric Thompson, the BBR's director, said on Market Journal earlier this year, about a quarter of the state's economy is tied to agriculture. The Bureau's latest forecast shows net farm income sliding again in 2017 before improving. We talked with Eric again this week to ask how certain issues were contributing to the outlook, but we started by asking for an update on the strength of the U.S. economy.
Well, the U.S. economy is doing a bit better. I say that we have a more balanced economy, both globally. We're seeing stronger growth in Europe and China, which of course helps us here in the U.S. And within the U.S., I think we're seeing a more broad-based growth. So the last few years, we've had good growth in services as jobs and real incomes have risen, so have spending on retail, services, construction, things like that. What's happened in the last few months is our industrial sector has done better. So a little bit of a comeback in energy, I think improved business confidence. However, there are kind of constraints to growth still. We do have an aging workforce. The baby boom generation is retiring just right on schedule, and that does limit growth in our labor force. We're a little bit more skeptical about international immigration than we once were, legal immigration, and that's also limiting the growth of our labor force. We think the U.S. economy can grow at a good solid rate, nothing spectacular, through 2017 and over the next 3 years.
Here at home, what does your latest forecast indicate about the outlook for Nebraska's economy?
Well, that U.S. economy sort of creates the speed limit here in Nebraska. It's hard to outperform the U.S. economy year after year. So we think growth will be moderate here too, perhaps even a little slower than the U.S. because, of course, our key industry, perhaps several of our key industries, but our key industry, agriculture, is not going to be experiencing a period of growth over the next few years. So it kind of constrains the overall growth in the Nebraska economy. Not a lot of job growth in transportation either, but ag will be okay. We think incomes will stabilize and bottom out here in 2017, but without a lot of growth in ag, it'll limit growth in the Nebraska economy.
Give me the recap of what farmers have seen for net income in recent history here.
Well, it's fallen quite a bit. Now, it did fall from record levels. 2011 was a record year. 2013 was quite close to that. But after 2013, we've seen it fall about in half. So from about $7.5 billion in farm income down to, we're projecting $3.7 billion here in 2017. Now, the other parts of the farm sector, the suppliers, the processors, that hasn't contracted like that. But if you look at farm income, it has, and obviously that affects what farmers can buy for their business, for their household, and really has affected the rural Nebraska economy especially.
And to be clear, the rebound that you're seeing in the next 2 years is not due to a rebound in crop prices, correct?
That's right. So we think stability in crop prices will be achieved, which is not great news, but kind of a positive after the declines we've seen. And so with stable prices, without a lot of help from the federal government, we think incomes can grow, but it'll grow due to the entrepreneurship and ingenuity of our Nebraska farmers, who will be able to do things a little more efficiently and raise their income, 4%, 7%, depending on the year. So a little bit of a rebound in farm income, but we're at this lower level now.
Let's talk about a few things that play in there. So government payments from farm programs, what do you expect to see? Well,
we think those are going to decline. Some of the payments now are based on a rolling average of past prices, past yields, and certainly the prices that we saw back in 2013 now are a smaller part of that calculation. So there just isn't the base for the farm payments that there was a few years ago. So farm payments will decline in 2017, probably in 2018 as well.
Is there a nervousness about international exports?
No, I think there's some optimism about that. We did see at the end of last year, we saw a big run up in the value of the dollar, but that now has largely reversed. We're kind of back to where we were in 2016 with a dollar that's more moderately valued. That's good for agricultural prices. Interest rates should stay low. Fuel prices should stay low. Now that's kind of a mixed bag for Nebraska agriculture, but interest rates will stay low. So that'll be positive conditions for farm income.
Yeah, I should ask to close out with here what you're seeing outside of agriculture in the state, the areas that you do believe will do well.
Construction should do quite well. Perhaps mostly in the metropolitan areas, but I think there's cities and counties in Nebraska that have made a real concerted effort to build more new homes, and we'll see some success in some of those areas. Services, obviously that includes healthcare, but also business services, and even just entertainment and recreation. As real incomes rise, those should do better. So the parts of rural Nebraska that excel in tourism and bringing in those tourist dollars should be in good shape over the next few years.